Welcome to afrimind. Today we're going to have a conversation with Yomi Jemibewon, one of the founding partners of Cardinal Stone, a world-class African investment bank headquartered in Lagos, Nigeria. Yomi runs the principal investments division within the bank, which invests in high-growth companies in Africa. And today we're going to have several conversations. Firstly, we're going to talk about some of the peculiar challenges in setting up a world-class institution in Africa. And then secondly, we're going to talk more, going to Yomi's turf, and talk more about some of the things he looks for when he's trying to invest in portfolio companies. And we're going to also have a discussion on some of the challenges, the unique challenges that companies face when they're trying to raise funds in Africa. So thank you once again, and welcome to the conversation.
Nigeria, for example, so the Nigerian banking sector, commercial banking sector, is notorious for not giving loans to businesses, particularly small businesses. And do you think, for example, I think even Mo Ibrahim, when he was starting, not Nigerian, but when he was starting a business, he found it very difficult to raise loan capital. Now, so the question is, do you think that private equity, venture capital is the way forward for Africa in terms of, particularly even Nigeria, in terms of a way to get funding to start up your business?
Okay, you've actually asked a lot of questions there, and I'm going to try to address them one at a time. First of all, we need to, I think sometimes we can be harsh on African or Nigerian banks. First of all, commercial banks, by and large, are not structured to give startup capital.
Yes.
By and large, they have deposits from people like you and I.
Yeah.
They have to be they have strong regulations. They have to be careful where these deposits go.
Yeah.
They give loans, and a lot of times there are rules to make sure that they don't have too many non-performing loans. By and large, they look for collateral, and more importantly in Africa, cash flows. And that's what gives them comfort to know that these loans will not go bad. The banks are not structured to give the kind of supervision that is required for a lot of startup businesses.
But even with established businesses, they're not necessarily giving out.
Okay, so see, that's another another question, right?
Yeah.
The first thing is startup. The banks are not structured to give startup capital. Established businesses, I actually disagree with you.
Okay.
Today, we talk with the banks a lot. The banks have a lot of capital that they want to disburse. They don't find it easy to find the conditions that they require to be comfortable to disperse that capital. The moment those conditions exist, they give, and that's something I want to say. A lot of people say capital is the problem in Africa. It can be the problem, right? But oftentimes, 80 to 90% of people who say that, capital is not their problem, because they're looking for little amounts of money, and there are other things that they need to bring to bear, and if they did bring that to bear, they will be attractive enough to get that capital. Now, they might get to a certain size where capital becomes a problem, but increasingly so, there's so much more capital looking to enter Africa, but just not finding the right conditions. Now, like I said, you asked a lot of questions, and so I have to be careful to address them. Now, when you talk about existing businesses, again, as a financier, if you come to me for capital, let me not be too defensive to the banks. There is a problem within the banks, right? Which is, by and large,
risk averse.
It's risk averse, but they're not structured to do project financing as we know in the US. By and large, what does that mean? That means you come with an idea of what you're gonna do, your projections, and they finance you based on those projections. Now, it's not because they don't want to. It's because of their experiences in the past. Now, they do give project financing for a select, set of companies or promoters, but often they give those finances based on proven track of doing other deals. Because you have to understand, forget the banks for a second. No, like when you talk about the banks, let's go deep down. There's an investment committee. There is a loan manager. Those people's jobs are on the line. I don't know if it's done in America, but in Nigeria, when a loan officer's loan goes bad or is going bad, there are times when his pay is withheld. They're different because they're not sure why that loan was given in the first place. Was he compromised? And things like that. So the people within the value chain have to be very careful before they put their lives on the line to say, let's give this loan. And oftentimes they require cash flows that they know. So you are correct. They are very risk averse. But that's because people have been burned. It's experience. And so you find that banks, by and large, do not like to, even with existing companies, finance new projects unless your existing cash flows can support a good percentage of the required, cash payment. Now, what we found is the more you prove yourself, your track, the more willing the financiers are to give you this financing.
Okay.
And that's why you find that the big firms that have been successful are the better position to continue to attract capital. You said, is private equity venture capital the way? Yes and no.
Okay.
Private equity money is really good. But by and large, I would say, and I guess I'm being quoted, 80 to 90% of that capital that's coming into the market today is targeted at expansion stories.
Okay.
So it's almost similar to the bank again, right? They're looking for an expansion story.
Yes.
And for good reason, right? A lot of this money is coming from outside the continent.
Yeah.
They're already taking, higher risk, in their view in coming into Africa. Why go into the complexity of going to a startup? Particularly when all you want to do is write a check. Many of these firms, they want to write a check, let it ride, and get the returns.
Yeah.
When you do venture capital or venture initiation, there's a lot more hand-holding that you have to do. Many of these firms are not ready to do that. They're not interested in doing that. So now that's also why today you don't have that much venture capital activity in the market. So how do people get their ventures financed? There are largely three sources. 1, self-financing. 2, family and friends. 3, angels. Now, angel investors, what are angel investors? Angel investors are, high net worth individuals or institutions that are ready to seed investments. But angel investors in the US and developed markets are usually well-structured institutions. In Africa, they're your uncle or a successful retired chairman.
Who is related to your uncle?
He doesn't have to be related, actually. And that's one thing we found. For example, what we found is there are actually a lot of successful businessmen and women in Africa who are looking for the right people, the right teams. And they're ready to invest in those right teams because they've made all their money in Africa. They believe in Africa. They're ready to write those checks, but they're waiting for the right elements. And that is part of what, we actually leverage. When people ask us, where do you get the capital for your investments? Till today, majority of our capital comes from Africa investors, because they like the way we structure things. They like, by the time, they see our track, they're getting more and more comfortable with our track. So they're getting more and more comfortable writing bigger checks. But what had to happen on day one, you had to basically have the right team. You had to have the right vision. You had to have the right medium to communicate that vision. So your presentation to say, this is what we plan to do.
Yes.
This is how you fit into the story.
Yeah.
This is where we're going. This is our 1-year plan, our 5-year plan, and this is where we're going. And this is what we have put on the table to let you know that we are committed and we're not going anywhere. To some of these guys, what you're asking for will not change their lives. But for many of them, supporting this vision means a lot to them, right? And they see that package. Many of them will be ready to do that. They don't have to be relations. And they're there in Africa. Now, I'm talking about the young entrepreneur. But it's not just the young entrepreneur. So even people like Mo Ibrahim, and what we found is the most successful business people, when they want to start new ventures, they call their friends that are successful and they say, you know what, there's this new project I want to do and I want you to take 10% of it. I want you to take 20% of it. Those are angels too, but they're their friends. But because this man or woman has proven a track and they know how this person does things, they will write their check. And they know that if things go bad, this person is going to come back to them and say, things went bad, this is where it went wrong, and they would believe it. A lot of times I tell people in Africa, if you can prove people that you're competent at what you do and you're trustworthy, the sky is the limit. And those are the two things that people are looking for. And the moment you show them that you're those two things, pick any area, you have people who are willing to bet on you. Because that's our culture.
Thank you. Great. Thank you very much. It's been an absolute pleasure.
It's a pleasure.